Good morning, traders, and welcome to the Pirate Traders Morning Show. My name is Charles. Today, I'm joined by Lady D. How's it going, Lady D?
It's going great. How you doing, Charles?
Good. All right, well, let's jump into some TA. Obviously, the only thing that matters today is the FOMC meeting. Every trader who's trading the U.S. markets, whether it's stocks or futures or whatever, they're just waiting for 2 p.m. when those minutes come out. Today is a day where Powell is going to be speaking at 2:30. So expect, the normal FOMC behavior on those days. So what is the normal FOMC behavior? Well, generally in the morning prior to 2 p.m., we stay relatively range bound. We don't tend to make big moves. If we do start to make a big move in the morning, it often retraces by 2 p.m. and we're right back around the opening price. So don't expect anything crazy in the morning. At 2 p.m., expect a lot of volatility. Expect the market's tempo to change and pick up and just start going, just rapidly going up and down. And then expect the market to slow down for a little bit. Generally around 2:15, it starts to chill out and relax for about 15 minutes. And then once Powell starts speaking, that is generally when it will pick a direction and start to just go, if that's what's going to happen. Doesn't always happen. Sometimes it just balances in a range the whole time he's talking. But if it's going to trend and make a big move today, generally they will wait until he starts speaking. Usually within the first 5 to 10 minutes of him talking, it'll pick its direction and it'll start to make a run. So let me just switch over to the screen share real quick. Okay. So as far as ranges are concerned today, yesterday's range to me seems like a good area to kind of expect chop and sideways and grind. Okay. You can see over the weekend, let me just pull up my drawing tool real quick. Doobie-doo. Okay. So you can see over the weekend, the market just chopped sideways right here around this cumulative node of volume. We'll call that, 5680 to 5700. Okay. Chopped all day the next day on Monday. In the overnight, it chopped most of the overnight, and then it tried to make a move higher at the end of the night. The regular trading hours tried to continue that momentum, but ran out of steam and then reversed right back down to this node once again, where we stayed the rest of the day at the end of the day yesterday. And then once again, the overnight went nowhere and basically just traded around inside this thin area from the night before and the previous day. Okay, so all of that tells me the market was just going nowhere. The market has been waiting for the FOMC. If it's been happening since Saturday, the market's just been waiting for FOMC. There's no reason that won't continue this morning. So my guess is that today we will just trade inside yesterday's range in a very sort of choppy manner, going up and down. I would be looking for resistance. The first area to watch for resistance above will be 57.21 and then up around 57.31. And to the downside, I would be looking for support right around that overnight low, 56.95 down to about 56.86. And I would assume the market is pretty much just going to chop between those areas. If they do get above yesterday's high, or they do get below yesterday's low, again, before 2 p.m., my assumption is they'll turn around and come back. They'll go up there to maybe take out some stops, but then they'll come back, or they'll go down to take out stops and come back. Because like I said, on FOMC days, it is usually pretty close to the opening price when we get to 2 p.m. So if it does start to pick a direction to move, it doesn't get a lot of follow through. Okay.
Charles, I had a quick question about yesterday's C period. Just in case anybody got caught in that.
Okay.
The fact that when it broke out of the IB to the upside in the C period and it didn't bring any volume or get follow through, and when it re-entered the IB, that often is a signal that the range extension to the upside is being rejected, right? So there's no range extension. They tried to extend to the upside from the IB period, but it failed. And then look at how it failed. All those people that were caught long had to close their positions, and that's what caused the liquidation. So sometimes I think it's important to note in the C period, just because I have seen this happen often when I go back and study my profiles, that if the C period is rejected, that extension does not get follow through, which it obviously didn't, you can see from the volume taper at the top, that can be your signal to go short if it re-enters the initial balance area. What are your thoughts on that, Charles?
Yeah, that to me is perfectly logical. It makes total sense. I wouldn't go short that quickly. I wouldn't be instantly looking to go short as soon as it re-enters the balance area. I could have made a case yesterday for the D period staying above the C period low, and that could lead to the E period taking the market higher. So I wouldn't have felt like you should instantly jump into a trade. But yes, there are multiple signals there to definitely not be bullish, right? Like you said, first off, it got above the initial balance high and it couldn't do any business up there. The volume completely tapered off. We spent very little time and we pulled back into the initial balance. So that tells us the market is not that bullish. And then when it re-entered the overnight range, again, it then becomes a look above and fail of the overnight high, which is bearish to see and increases the odds that the market is going to get a pullback. But it didn't do it, not right away. It was hours later that it finally.
And it stopped one time framing early, which is another big signal. Yeah. Right, in the E period. That's pretty early. If we were going to get extension to the upside and it was going to turn into some kind of trend day to the upside for the new all-time highs, they wouldn't have stopped one time framing so early in the day. That's
100%. Yeah, no, I agree. That's what I'm saying. So to me, it wasn't bullish. There wasn't a reason to go long up there, but it also, I wasn't necessarily expecting a massive sell-off to the lower end of the previous day's range, like in the C period. Right. By the time we got to the E period, yeah, because then you got cessation of the trend. You know, the market's been going nowhere. It's got to break something, and it's obviously probably going to break lower. So later in the day, in the E period, I could have started to get bearish, but I wouldn't have been bearish right away because there are times where the C period barely pokes above the B. Yeah. And then it kind of rotates for a little bit, and then later in the day,
then it breaks out.
It makes the big move. Yeah. So that you're absolutely right. That is a reason to not be bullish because it should have been able to turn the B period high into support. It should have been able to bring in new business up there, and it definitely should not have re-entered the overnight range. So yeah, lots of signals to not be bullish, but I would say I had to wait a bit to get.
And the other thing I just want to mention is the fact that the D period was inside the C. It's kind of like when we talk about the value being inside the previous day. The fact that the D period was completely inside the C period for 30 minutes signals that the market was struggling to find direction and it wasn't very clear. So in that D period, that's when, you know, I also would have started thinking, okay, the D period is completely inside the C. So the market does not really have super conviction one way or another. So just be careful.
100%. Yeah.
That, you know, I think it's so important.
The inside bar is the sign that there's uncertainty, that people don't know if it's going to go up or down. So if the next candle, the E period, then prints lower, giving you cessation of the trend, so you no longer think it's going to keep going up, and the market is now picking a direction, then you can assume it'll keep going in that direction for sure.
Right. So I think it's so important to teach these signals too, to just teach people to take caution and to not be involved in a trade unless you have clear signals one way or another. And I think it's just as important to see the signals that tell you, okay, let's go long, it's a trend day, to watch any signals that say, okay, let's be cautious, let's stay out of bad trades, because what's the most important thing we can do as traders is protect our capital, right?
Yeah, and that's the other side of that coin is the not getting frustrated if you get in trades and they don't work. You know what I mean? Because this is a common thing where like maybe you got bullish in the C period. Maybe you were thinking, okay, we started one time framing higher. So if we come back down and test the overnight high, I'm going to get long there because I think we're going to bounce. So then the market comes down. It doesn't bounce. So you're filled. You're long now. You're watching the market come back down. You're getting frustrated. The D period is just going sideways. You're going fucking nuts. You're like, God damn it. You know what I mean?
Yeah.
You got to stay calm. You got to stay. And then when you get cessation and you get stopped out of that trade, it's okay because there's a lot of money to be made on the way down if you can switch your perspective very quickly. And that's the other side of that coin is like, yeah, a lot of trading is just waiting and waiting for a good entry. And once you're in a trade, waiting and waiting for it to either work or not. But then the second you know something has changed, changing your mind.
And you take action quickly. That's kind of what we were talking about last week. just with the mental game, being flexible and being able to change your opinion, really quickly, and really obsess over what signals am I seeing in the market right now, instead of thinking, oh, just because it's one time framing for 3 periods, I'm automatically going to go long. It's going to be a trend day. Like, just being open to receiving that information that we just talked about. Like, the C period didn't get extension. The D period was inside the C period. Then the E period stopped one time framing.
Yeah.
But yeah, patience is everything.
Yeah. And tempo is another thing yesterday that you could have paid attention to. A trend, momentum, should feel like momentum. It should feel like shorts are being forced out of their trades. Longs are chasing the market. They're like so desperate to get long.
Yeah,
you should feel that momentum. And so even if you weren't even looking at, C period, B period, D inside, even if you weren't looking at any of that, that just slow, grindy, the market doing nothing for hours and hours, that's telling you this isn't momentum. This isn't the market chasing to the upside,
Right. That's a great point. That's so true.
Okay, so that's pretty much all I have for TA today. Like I said, nothing's going to matter until 2 p.m. Don't assume whatever the first reaction of the market is when the news comes out that's what's they're going to get followed through, because very commonly with FOMC, 2 p.m. will strike, the market will make a huge move one direction and then completely retrace out of nowhere in like 5 seconds. So don't assume just because it starts to make a big move one way that it's going to keep going. It can reverse out of nowhere.
So Charles, can you give us any advice on how to trade these announcements? Because it really is gambling. We can make the argument, just based on looking at the charts that I don't think it's coincidence that we're near all-time highs. I don't think it's coincidence that this is happening, the day before this announcement today. You've got people in the camp that think they're going to cut 0.25. You have people that think they're going to cut 0.50. How's the market going to react? Is it priced in? So, truly, these are huge opportunities as day traders for us, because, huge amounts of money can be made very quickly if you're in the right direction. Mm-hmm. So how would you advise, newer traders to be able to take trades, but not risk so much, because there's a lot of losses that can be had too if you don't know how to manage your risk in this kind, because this is a gambling trade basically.
So many great points in there that I just basically agree with everything you just said. So first things first, recognize fundamentals don't matter. Okay, what he says, what the notes say, don't matter. What matters is what's priced into the market. So today, the thing that has me really nervous, and we talked about this yesterday with Paul, is if everyone's convinced there's going to be a rate cut and they're just arguing about how much of a rate cut, that tells me that if the news comes out and they say we're not cutting, there is going to be an emotional reaction. There's going to be a lot of traders who have been, and it's not like they just accumulated yesterday. There's going to be traders who for months have been planning for this rate cut to come, and they've been waiting for it. And there's going to be a lot of unwinding if there is no rate cut. You know what I mean? So it's not really what he says that matters. It's what's priced into it. And the other side of that makes things just everything so much more complicated these days, and we've talked about this to exhaustion on the channel, is that people now are making their bets using options instead of using underlying shares or futures. And the problem with that is the people that sell the options also hedge their positions. So a lot of times, even if the market is going to break lower because everybody's been thinking it's going to go up, doesn't mean it has to instantly break lower, because those hedges will protect the market from making any kind of massive move. So it's always a gamble. It's always random. You never know what's going to happen. And also based on what happens, there's more bets being put in. So if everybody's convinced the market is going to go up and it starts to go down, new people start shorting. They start chasing. So first things first, ignore the fundamentals, watch the chart, pay attention to what's happening with the chart. That is the only reliable information. As far as entering trades, the only thing, and you brought this up, I have made a lot of money on FOMC days. There have been times where I have gotten lucky and gotten into a trade and made thousands of dollars in seconds. And it's insane how much money you can make when the market gets this volatile this quick.
Mhm.
But the catch is you can lose just as much money just as quickly. So for me,
Exactly.
my strategy for entering these is I get in at market. I've got no stop. I'm just praying to the money gods that I'm not in the wrong direction the second that I enter. And as soon as my trade is profitable, by even just a few points, I get my stop above my entry, say if I'm going long, or below if I'm going short. And then I just kind of trail it. So if I get long and the market starts boop, 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 going higher, I just kind of keep pulling my stop just below price, and eventually it stops me out.
That's so
To
great,
me,
because
that's
what
the
tends to
only.
happen with these moves is they happen so fast, and they literally just will continue. Like it won't even, you can move your stop to above break even and it won't even come close to coming back and stopping you out sometimes. Unless you're really moving your stop aggressively towards price. And I've read about people who only trade FOMC days. There's day traders who literally only trade, like they prepare for months and months just for these announcements, and they have their strategies preset and pre-figured out, and they can make just their whole year just basically trading FOMC days. So I think
Yeah.
it's really good that we, discussed some of this. And the stop thing though, wow, Charles, no stop. But I mean, that has happened to me where if I put a stop, it'll come get my stop and then just fly in the direction that I was in the first place anyway. So I see that's why you are choosing not to do that, right?
Yeah. Yeah. And it's like, what you have to understand is I'm not just throwing random trades out there. It's like I did this in my paper account for years before I did like a bunch of FOMCs before I ever did it with real money, because it's about waiting to see. And again, it's not an exact science, so I can't teach you exactly what to look for, but it's like I can just tell when the shaking out is over and it started its momentum in a certain direction. So I'm never entering a trade in the first 15 minutes, no matter what, because that's all just shakeout time. And then when Powell starts speaking, there's just kind of a different feeling when it's one of those days where it's just going to keep going straight in one direction the whole time he's talking
insane.
for like fucking an hour straight. It will just keep going and going. There's those days where it does that. And then there's days where it chops around and it keeps going to like the previous day's high, the previous day's low, the previous day's high. So when it's the choppy one, I never touch it. I'm not, but if it's one of those ones where I'm like, this thing is just going to keep going, then I enter. And I've just found if I try to put a stop in, it always dips down, takes out
It
that
always
stop
takes,
first,
yeah.
and then
It
it
takes
goes.
stops out on both sides because they know
Yeah.
people are doing that.
Because it's
Absolutely.
just such a big range. It's just,
Yeah.
it will move 15 points up and then 15 points down and 15 points back up in 3 seconds.
Yeah.
Like it will do it so fast
So
that
fast.
you're literally, your computer can't even visually show you it happening in real time. Like you'll
Yeah.
see your order disappear before the fucking chart even gets down to the level. Like
Yeah.
it's crazy how quickly it happens.
Well, let's talk about option C, because this is something I was thinking about last night. Everyone is so focused on this. I mean, I was watching like all the shows after the market closed yesterday, and so many of the analysts are like, oh, I'm in the 2.25 camp. I'm in the 0.50 camp. I'm like, and then like you said, what if they don't cut it all? Because the news from all the news things that have been coming out, the CPI, the PPI, the unemployment reports, the economy there, it's showing that it's still strong. So I also think what could happen today is, because there's so much hoopla around this event, that it's going to be a big nothing burger, and the market might just go absolutely nowhere today. I mean, that is an option.
Yeah, no, that does happen. And I feel like every time I go on the live stream and I say, get ready, guys, this is going to
Yeah.
be fucking crazy. It's like one of those FOMCs where it goes nowhere and it just like bounces around in like a 20-point range the whole time.
It's such a disappointment.
I know it is a huge disappointment because you get so excited for it.
You get so excited.
I don't think, even though I just said that, I don't think that's what's going to happen today. Because
Yeah.
I do think there's a lot of people who have been accumulating positions
Yeah.
leading up to this for a while. Like they were convinced he was going to do a rate cut in the last FOMC. And when they didn't, everyone was like, well, now he definitely has to do one in the next FOMC. So yeah, I mean, we just don't know what's going to happen. We may get a crazy move one way or the other. We may get nothing. That there is that option C, you know?
And some of the analysts are saying, well, if, he's got to walk a fine line, because everyone's expecting the 0.25, I think. There's a few that are expecting the 0.5, but people are saying, well, if he does the 0.5, The Fed hasn't done 0.5 cuts, unless there's like something seriously worrisome in the market. And then if he does 0.5, because he is I believe he's a little behind the curve with starting these rate cuts, is that going to signal that the economy is not in good shape, and then the market's going to sell off like crazy?
Yeah, that's what makes this so complicated. That's what makes this. It's like, so the rate cut, if it's a 0.5, should be bullish for stocks because money is cheaper, right? And when money is cheaper, people buy assets, and that's just how the world works. And the money printer goes burr and the market goes up. Like, that's just how it happens. So that should be bullish for stocks. But like you said, that is also the Federal Reserve saying we're nervous about the economy. So it's like you're getting this mixed point of view, which is why I don't trade fundamentals. It's too confusing. I don't know.
And actually, some analysts were saying, like, don't listen to whether the cut's 0.25 or 0.50. Listen to when he starts speaking. What is he signaling with his comments? I mean, a lot of the analysts last night were saying like that's more important actually than what the level of the rate cut is. It's what does he say after that?
Yeah, no, it's when I found out that they have AI computers that watch the video feed and they measure how much his eyes open and close and expand to try to figure out if he's telling the truth, try to figure out if he's nervous. Like, it's insane how much pressure this poor man is under to like deliver things in a flat tone and like to not panic anyone, because we as humans, we like to be afraid. We like to panic. We like to have things to freak out about. And like his whole job is to not let that happen.
Yeah.
So, yeah, I mean, I don't have an answer for it. Who knows what's going to happen?
No, I think it's interesting. I think this is a great conversation, to happen this morning, especially.
Yeah. So good luck to all the traders out there. Looks like nothing too exciting in the chat here. Some different opinions on it, but yeah, we'll leave it at that. Good luck today. Remember, don't react at 2 p.m. Wait for Powell to start speaking and then trust moves much more so.
Yeah. All right. Have a great day, everybody.
Thanks a lot. See you guys
later.
All
right.